Welcome, wise investors, to another update. And for those of you who have been following these updates, those of you who are truly wise investors, I wish you the best, because this is the best time to really take advantage of all of these opportunities, especially the opportunities that are going to come this year. Hold on, let me take off this screen thing. Okay. All right. The power save mode is what it was. Yeah, this is the best time. I mean, obviously you can see from our strategy is doing very well. I know some of you guys might notice the orange one. Let me single that out. Okay, you can see that that's the monthly. So that's the fairly new one. This is normal, and that's the one that's going to take a little bit more time to grow. So we've just seen a little decline in that. So a little down movement. Let me see, what's the highest peak on that? 5%. So we're currently at 1%. So if we were to compare current market value with the other current market value, this one's averaging, so that's at 5%. So we're averaging anywhere between 2 to 3% growth overall for the month if we were to take the current market value approach. Okay, so I highly suggest, if you're new, you could take the current market movement approach, which is our version of short term. I want to emphasize that this is the Forex Helper strategy. That's the name of the strategy. It's the short-term version associated with the Forex Helper strategy. So it's not like what you might consider short-term if you were to talk about day trading or your typical Forex. Okay, we're not doing these hourly and stuff like that. Now, I will say this: there is an aspect of the Forex Helper strategy, since I'm on that subject. There is an aspect of the Forex Helper strategy. I used to hold mentorship. I'm not doing that right now. I may open up later in the near future. I'll let you guys know. But when I did teach the mentorship on understanding the Forex Helper strategy, I used to teach the short-term aspect. There's a short-term aspect of the Forex Helper strategy that's a little bit more, you probably might call it somewhere borderline day trading. Okay, I won't call it scalping. Okay, but it's very, very quick, and it's basically what I used to do with my earlier videos. If you go back to my YouTube and go back to the earlier videos, you'll find out I had videos titled "How to Make Profit in 1 Day" or "How to Make Profit in 3 Days." That's the more short-term aspect of the Forex Helper strategy that I don't really promote. I don't really talk about. And the reason for that is because I'm an educator, and I want to educate those who are coming out of that mindset of scalping and day trading, to come out of that mindset. So I don't want to give them something that might trip them up. So that's for people who are more mature, those wise investors who have already come to a place within themselves where they have climbed up to the top of that mountain, and now they've mastered themselves when it comes to patience, when it comes to greed, okay, where they've overcome impatience and they've overcome greed, this impulse to buy more lot sizes than they need, than their account can handle. Okay, so there's no need for that. There's absolutely no need for that. I mean, that's like that's the first thing that I lay out in my ebook. And that's one thing that I tell everyone who comes through our network, is to make sure that your margin level percent area is where it's supposed to be. And you'll never have to worry about blowing your account. Ever have to worry about blowing your account. If that's one of your problems, then once you utilize that method, you don't have to worry about blowing your account. Okay? Let me go into one of these. I probably want to do something a little different today. Let me go ahead and highlight the rest of these. Let's see where we're at with all of the accounts here. So let me single this out. So see, this is the one that we mainly follow, current market movement, 35% growth, almost at that 40, guys. What was the highest peak on this thing? 45%. Oh, okay. All right, so we're getting close. Now, obviously, we already know that we're gonna see, it's a pattern, so we're gonna see a down move somewhere down the line. Okay. Are we gonna see a down move similar to what we saw when we hit 45%? Now this down move is extreme. Okay, let me talk about that since I'm on that. This down move from this 45 to 5 is extreme. I will be honest with you on that. That usually happens for two reasons. Usually happens when we have something called a total market shift. And basically what that means is when every market, we're talking about the Forex market, we're talking about the commodities market, indices market, stock market, cryptocurrency market, when all of them simultaneously, the majority of all those assets switches positions. That's what we call a total market shift. And when that happens, things go sideways. It usually happens fairly quickly, so it can happen without warning. But there's always a recovery. It's just that sometimes the recovery could take a little while. Now, that usually happens it used to happen when I first started this back in 2016. It used to happen maybe 3 to 4 times a year. And it usually kind of corresponds around the time when there's a quarterly change, when quarterly reports would come out. Okay, that was usually the case, but that has since changed because now we're entering into a new digital era. I've talked about that, and I've talked about that. I'll mention it again, but I won't really dive too much into that right on this video. But basically, since we're entering into a time where there's more volatility, as we approach a time where volatility will continue to increase, we're going to see a lot more of these total market shifts taking place. Now, is there a way you can avoid it? Yes and no. I mean, if you there are ways to circumvent, let me say it like that. Not avoid, but circumvent. Yeah, I mean, if you avoid it, that means you just don't participate at all. Okay? You can do that. You can just don't participate. That's a way to avoid it. Technically speaking, you could just not participate. But if you do choose to participate and you get into that, it's going to just be a bumpy ride, okay? But you can always recover and you can always overall grow. I mean, you want to see an overall growth long term. That's the whole point, okay? So that happened within a short period of time, within a month or two. I'm not sure. Let's see, November, December, something like that, okay? So, and so that happened between a relatively short amount of time, but overall from November to January, and then we're gonna go beyond that and see how that fares out, okay? And we're gonna see a continual growth, I've done this every year. I've just never done it with this method where I can show you guys the charting system where you can visually see for yourself that this works without looking at the MT4. Now, I used to do it through MT4. Every month, I would place trades and then collect at the end of the month. And I would show that month by month by month. But I don't know. It seemed like it was helpful for some people, but not for most. I think this probably will be the most helpful method, is to show you all a third party, non-biased, computer calculated, documented proof, okay, that this strategy works. Is it perfect? No, I don't think any strategy is perfect out there. I think there are other strategies out there that also work. I'm not claiming the mine is the only one, but I will not say that it's perfect because it has its moments. But does it work? Yes. Will you be able to have success most of the time? Yes, because it is based on the principle of long-term and based on other important principles as well. So let's go ahead and check out the other one here. Let's see, where are we with again, it's the same thing, current market movement. It's just this one's a little bit less growth. The difference between this one and the other one is mainly because of the cryptocurrency. I will say that. I'm not sure why this one was titled high lot size. I'm gonna have to get on them to correct that. So this one should be there are high lot sizes on here. Okay, so that's true. So that's true for that part, I will say that. But this one mainly has to do with the absence of cryptocurrency. The other one has cryptocurrency in it, so that's part of another reason why we can see a huge change in the jumps here. Okay, there's cryptocurrencies involved. Whenever there's cryptocurrencies involved, there's gonna increase the performance of your portfolio or decrease the performance of your portfolio, okay, drastically on both ends because of the nature of that asset. Okay, excuse all the noise. Okay, all right, let's see, let's take a look at what I really wanted to show you all, and that is going into one of these here and taking a look and see how it's fared with the trades that we've been placing. So I want to go a little deeper here than I normally would go. Okay, so here, let's see, I don't want to show too much, so because this is actually showing our current open trades, which wouldn't be fair for those who are paying. So all right, so here we are on this is the history. These are not open trades, and for the sake of those who are paying, I just won't share the information here on what's being traded. So obviously you're looking at the top ones are the ones that didn't gain much. Those were now if you're looking at this, you might say, whoa, look at all that red. Well, yeah, those are the ones. Now, a thing that you have to understand about this strategy is this: there will come times when we need to switch positions. So when we switch positions, we don't know when we're going to switch positions, meaning before we need to switch. Let me probably rephrase that. Okay, in other words, the only time we switch positions is after the fact. There's no way with a crystal ball that we're going to know if an asset is going to switch positions tomorrow. We switch positions after the fact. Does that make sense? I hope that's clear. This isn't about predicting the future. This isn't about having a crystal ball and taking guesses. None of that stuff. This strategy is heavily technical. So it relies heavily on technical analysis, and the downfall of technical analysis is this: is that fundamental analysis. That's the flip side of the coin. Remember, there's two sides to the coin, so you have the technical and fundamental. One cannot do without the other. So unfortunately, the fundamental analysis, the fundamental side of the coin, usually supersedes all of the movements for a short period of time. It usually overpowers the technical aspect. But the technical aspect on the long term usually always wins. So that's the reason why I'm biased towards technical analysis than I am fundamental analysis. So when we do need to switch, we always find out after the fact. And the reason we find out after the fact is because here's the basic principle of it, because the computers, contrary to popular belief, computers are not as fast as human thought. Or I should say, computers are not as fast as human emotion. Okay, that's really what it boils down to. So when you have a mass group of people that are panicking and they're selling. By the time the computer calculates all of that, you know, the sell is going to pervade over the final results once everything gets calculated by thousands of computers, supercomputers. It's calculated very quickly, but they can't calculate faster than human emotion. That's just the truth of the matter, okay? So that's why. So we're waiting for the computers to calculate, and then we take our move, and there you have it. Okay, so let's just take a look at a successful one here. A 2% growth here. I'm not sure which trade that is, but let's go ahead and take a look at it and see how did we fare with that. Okay, so it's euro versus Australian dollar. That's what it is. Okay, I'm not sure why it does this. It blanks out. Okay, there we go. All right, so I mean, here, this is euro versus Australian dollar. See here, we took a buy trade at first, which was not, this was a switch position. So it ended up being a buy trade at some point. But at this point in time, we took a sell trade, which profited us 26 pips. Now, depending on what your lot sizes are, you know, that could have been $26, $260, $2,600, or $26,000, depending on what your lot sizes are, right? Okay. So, but we profited 26 pips, okay? This one was just kind of a short one. You can see it was open time, close time, so less than 24 hours, okay? The reason for this one being so short is because of the because we had to do it that way. I don't know how else to put it. Sometimes we have to do it that way when we implement our current market movement. Now, if you pay very close attention to the previous videos, especially, I think I made mention to this in the last video, and I'm going to close on this point, by the way, because I think this video overextended its time. Current market movement can go anywhere from 1 day upwards to 30 days, sometimes even 60. Okay, so when we talk about past 30 days, that's where it can kind of be a little bit of both. Okay, because there are aspects of this strategy where they both intertwine with one another. You'll notice that if you look at the those of you who have access to our daily financial market report, and before I even talk about that, if you're interested in that, getting access to our signals and our services, just contact us, and one of our representatives will get back to you, okay, on WhatsApp. So contact us, and she's really good. She's been doing very well. She's been training, but now she's running like a superstar. All right. Anyhow, the current market movement and current market value, if you look at the daily financial market report, you can see sometimes they kind of go back and forth with each other. What I mean by that is this. I mean, there's different things what I mean by that, but here. Due to the nature of the market, since the market is very fluid, there are things happening beyond what we can see. And one of those things that are taking place has to do with the intertwining of different elements. And that's what we have in this market. That's why this market is known as fluid, okay? If you can just picture the water, you know, moving up and down continuously, always constantly moving. It's never still. Water is just constantly fluid. But while it's fluid, you know, there's some other things going on. You know, you have, while you're going up on one wave, you know, simultaneously another wave is going to intertwine and go down, and there's all kinds of different things going on. That's why there's not just one strategy that works. There are multiple strategies that can work. It's up to you to actually find in that strategy and then fine tune it to its point where it can You can figure out the ins and the outs. And it's just like, I always liken it to like the scientist looking into something and examining something and finding all of the ins and outs of, it could be something as small as an ant. There's so many different inner workings within that ant. You can go deeper and deeper and go into the organs of the ant, and then go into the cells of the ant. There's something so small as that, but there's so many different things, functions taking place. Same with the Forex. There's so many different things happening that you might focus on one certain aspect of that thing, and boom, you might find your little niche right there. Okay, so that's just the nature of the market. All right, so sometimes you'll have these types of situations taking place, and then we make our move where it's necessary, and we're going to actually start to implement that quite a lot now. And when it comes to account management, so for those of you who want to get into account management, you're going to start to see your account grow considerably. Okay, we over the time past, we utilize certain methods with account management, and we found that most of our members were mainly satisfied with seeing more profit on a bi-weekly basis. Okay, anywhere from a weekly to a bi-weekly basis. All right, so we have to kind of compromise and find a way where it can suit everyone, ourselves and our members, of course, so that way everyone can win. Okay, and we don't have profit sharing right now. We took that off. So if you decide to take account management, you keep all of your profits. You just pay your monthly fee, and that's it. All right, for now. Okay, if that changes, we'll let everybody know in the future. But for now, we're not looking to have any profit sharing. Okay, that's it for now, guys. Remember, only winners invest in their minds for wiser returns.